Hi, before we kick off on today's podcast, I'd like to thank our sponsors, PropTech. Now, for those who don't know who PropTech is, PropTech provides technology to allow consumers to become more engaged with listings. So, for example, you go look at a listing, you see a room you like. Using PropTech software, you can actually change the look and the feel of the room to whatever you want. And you can also even upload your furniture so that it can then be placed in a room that you're looking at, and you might end up actually buying the property. So if you want to find out more about this technology and you're running a portal or you're running a franchise group site, get in touch with Stefan at PropTech. That's Stefan at PropTech, PropTex. Now, on to today's podcast, where we're going to chat with Tanuj Shori from Square Yards in India.
Hello and welcome to the PPW Pod, bringing you news, views and interviews from the world of real estate marketplaces and PropTech. My name is Edmund Keith. I'm the editor of Online Marketplaces. I'm joined today, as ever, by Simon Baker. How are you doing, Simon?
I'm very well, thank you.
And delighted to say I'm joined by somebody who I have been emailing on and off for about 5 years, but never actually spoken to in person, Tanuj Shori, CEO and co-founder of Square Yards. How are you doing, Tanuj?
All good. Thanks, Ed, for having me. Thanks, Simon.
So we wanted to get you on, Tanuj. You are in charge of a very interesting business. Square Yards is definitely one of the more interesting businesses that I have covered over the last 5 years. It would probably take me a long time to go over exactly what you do and exactly what, where you do it. Why don't you very quickly give the people out there who maybe aren't aware a kind of potted history of Square Yards and all the different revenue streams and all the different fingers in different pies that you have?
Sure. No, thanks, Ed. Like you rightly said, slightly different from a lot of traditional PropTech ventures you would have come across or we came across before we launched Square Yards. I always tell everyone, I think we had the advantage we were one of the last entrants in the market globally on the PropTech scene. So we spent a lot of time going over what worked, what did not work for a lot of players globally, what models were relevant. And a long back, and it's still not become commonplace, but I think still early in our evolution, first couple of years, we started talking about a term called full stack. It has become a very overused, abused term over the years. But from our industry's perspective, our perception was that when a consumer goes through a home buying journey, there are so many complicated value chain perspectives which are interlinked to each other. And to build a scalable business, to build a relevant business which could last, hopefully, continue to exist even after us, you need to solve for a lot of these problems across the value chain and not just the search and discovery piece. So for us, the search and discovery piece was the start. But our perception was after the search and discovery, the journey gets broken of the consumer. So how do we continue to influence that journey? So everything we have done in the last 9 or 10 years effectively has been centered around that focal point of trying to add value, trying to influence what the consumer is doing at every single part of the journey. Now, it started from search and discovery, but did not stop in search and discovery. We built the entire transaction ecosystem in-house. Once we built the transaction ecosystem in-house, we realized financing is a very, very critical part of the home buying journey. We cannot ignore that. The journey gets broken. So we built the financing platform along with it. And last but not the least, we have spent the last couple of years building the last mile connectivity to the consumer. Now, these are property management platforms, and these are home renovation platforms, these are evaluation services. The idea is to get closer to, so we divide our journey across 3 stakeholders: real estate developers, banks, financial institutions, and the consumers. And the fourth one, which has evolved over the last few years, is smaller intermediaries. Now, these could be real estate agents, these could be mortgage agents, and anything and everything we have built, right from the digital platform to the revenue stream, is to enable all of them together, build some kind of a flywheel effect and the network effect. How do we continue to drive synergies from these segments? So, but just to quickly break up the business today, at roughly, we are as much as a fintech, fortunately, as PropTech now. Around 45 to 47% of the revenue comes from the financing platform. Another 45 to 47 comes from the PropTech platform, which is combination of search and discovery plus the transaction platform. Last 7 to 8% is we call internally build tech, which is predominantly home renovation.
Okay. So just a couple of clarifying questions for me. Are you focused on new homes only or both new and established?
Common. So search and discovery, like any other plain vanilla search and discovery platform, focused on everything. In fact, we are the largest supply side search and discovery platform in India. We are the youngest, so we are not the largest on the demand side in terms of the traffic, but we are getting there. We have gone from 1 million a month to 9 million a month over the last 3 years. There on the demand, like I said, on the supply side, we are the largest listings platform. But when it comes to the monetization of the transaction stream, you're right. There we monetize only the primary part of it, and a large part has to do with India being an emerging market at the level and the scale where primary is almost 70% of the market opportunity.
Okay, so just to understand, now the established homes that are on the consumer platform, are they free listings or are they paid
listings?
Okay,
free listings.
So it's a freemium model, i.e. the high volume of listings gives a reason for someone to come to the site. You then use the visitation to the site to redirect them, I would assume, to the new developments because you monetize the new developments.
Traffic is almost 50-50 between new development and existing homes. New development traffic, we obviously monetize. The existing homes traffic, we actually don't redirect. In fact, we work very, very closely with around 80,000 real estate intermediaries, independent intermediaries in India, basically brokers. And we work with them closely. We give them the tech platform. We give them the free listings. We give them the free leads, which the consumer is searching for. Unlike traditional search and discovery platform, which rank or assign the listings and leads based on the packages and the monetization they get, we assign all that based on quality of the listings. So every agent gets a quality score, every listing gets a quality score, and that's how the algos work. Where we have started to build the business block around the existing home is on the financing platform. We went to these 80,000 agents and we told them we are not gonna take away a part of your monetization, but we want to work very, very closely with you on your financing needs. So over the last 4 years, basically 4 years back, we launched the consumer platform. We used to do roughly $200 million a year in terms of the financing platform business. So just to give you the perspective of how it has helped the existing consumer platform, 4 years later, thanks to these agents, thanks to these intermediaries, thanks to the consumers on the existing homes, financing platform this year will end up with $5.5 billion.
Okay, that's
sorry, just so $5.5 billion
of mortgages of
mortgages
transaction value.
Okay, and you're not the originator.
We're not. We are pure intermediary there.
Okay, great. Just want to be clear. I was going to say, where do you source your money?
Because what I wanted to highlight, there's a 30x growth in 4 years, predominantly on the back of the existing homes platform.
Okay. So your resale mortgages, $5.5 billion worth of mortgages per year, tied to both established homes and new homes, and then you also make money on the new home side by commissions from developers for selling homes.
Exactly. That's how the model is.
And the split of the revenues is 50% on more financing,
45, 46 on financing, 45, 46 on real estate.
Which is transaction revenue.
Which is mostly transaction revenue.
Right. And then a bit of money for other
home renovations.
Home renovations and so on. Okay. So how fast is the business growing at the moment, year on year?
So last 4 years have been fantastic. I think COVID was a game changer in our evolution because very similar to how it helped a lot of other tech-enabled businesses globally. So last 4 years, we have grown at a CAGR of roughly 50 to 53%. This financial year and our financial year ends in March, so ending now. We are looking to close the financial year at around 180 million revenue, which is our fees. So almost $7 billion transaction value, $180 million revenue, and more importantly, second consecutive year of profitability, around $7 to $8 million EBITDA. And this has grown from 30 million 4 years back. So 30 to 180 in 4 years. 30.
So 180 million revenues, 7 or 8 million EBITDA. So that's a sort of 3% EBITDA, more or less,
Right.
3 or 4%
Right.
EBITDA margin, which in transaction businesses, lots of sales. Hey, now that's a good question. How do you do the transaction side of your business? Do you have salaried salespeople? Do you have commission-based sales? How do you think about doing that? Because people try different models.
So I think the two large models, Simon, which we have come across and exist are agency and in-house sales. What we realized, I think partly because we are working in an emerging market with less regulatory controls, and those regulatory controls are evolving, we realize that it's imperative for us to control the brand image, control the entire supply chain efficiency. So instead of going towards an agency agent, which in any case is not prevalent in most of the emerging markets, we went towards hiring in-house agents. So we work very, very closely with most of the largest real estate developers in India. In fact, we are the largest distribution partner to pretty much every large developer in India. We have thousands of in-house agents who are working exclusively for us. They're like wealth managers. They come to office. The supply is given by the platform. The demand is given by the platform. The leads coming through the platform. They work very closely with potential consumers. Most of our consumers, so average demographic for our consumer is a first-time home buyer, 30 to 40 years. They either purchase a real estate asset because of significant emotional reasons, getting married, having a kid, so on and so forth. And then they go through the cycle of taking a financing, getting the home renovations done, etc. But where we make money is the commissions from the real estate developers.
Okay. So at the end of the day, your employees are not salaried because
They are salaried. They are salaried.
Now, sorry,
They are
how many
salaried.
do you have? Sorry, I didn't catch that number.
So in real estate, we have around 2,800.
2,800 salespeople. Okay. In real estate and in finance?
Another 2,000.
Okay. And do they, I assume they work together, right? Because if I'm buying real estate, I need financing and...
So 50% of our consumers who buy real estate in-house take the financing in-house. So there is an overlap there. But this part of the business is only 10% of the overall financing business because the financing business has become very large.
And these, salaried salespeople, there must be a small salary and a large upside commission.
Other way around, significant. So typically a good performer makes as much incentive and bonuses as their salary, but these are decently paid, fresh graduates who get trained in-house, but they are above par market salaries rather as that experience.
So when you look back at the last, how old are you? About 8 years, 9 years?
10th year now.
10 year now. Well, okay. So when you look at the 10 years of growing the business, what have been the 2 or 3 really key lessons you've learned? Things that the audience will be interested in hearing, that this is where we made a mistake and we fixed it and we grew the business, or some of those key learnings.
So I'll tell you, and I don't think if anyone has actually made this question before, so I'm just thinking on the go. I think one important learning we have had was understanding we are building 2 different DNAs, not one different DNA. So for the longest, I think where a lot of our peers also struggle, if you are building a search and discovery platform, that's a very different DNA than building a transaction business. And most of us have tried and built them together using same management teams, using similar ethos. And that's where most of us have struggled in trying to build both of them parallelly. I think this was the biggest learning we have had over the first 5-6 years. And we call first 5-6 years of our evolution is a tuition fee period. I think everything which could go wrong went wrong. Most of the capital we raised, most of the burn happened in the first 5-6 years. So those were the early blocks. We were trying to figure out how to build a scalable transaction business, profitable transaction business. Then we were struggling to integrate that with a pure deep tech search and discovery platform. How the biggest concern was if we cannibalize our current relationships, if the market agents will see us as a competitor or a threat or a stakeholder who is helping them grow. So we had to overcome that challenge. But why last 4 years have been fantastic is because we realized that these are two very different businesses. A lot of synergies with each other, yes. A lot of the common value chain play, yes. But we need to build a search and discovery like a search and discovery, and we need to build a transaction like a transaction, and we need to build a financing business like a financing business. So instead of taking an approach where we are building an ancillary segment, we told ourselves we are building potentially 5 IPO-able businesses. These 5 will become and should become unicorns in their own right over the next few years. Each of these 5 businesses are playing a multi-deca billion-dollar opportunity with a very fragmented market. And then it is my job at the top to ensure that all the engines are talking to each other. We are cohesive. We drive synergies from each other. But the core focus on ground is, so like, for example, my financing team's management bandwidth and directive is very, very clear. They do not care about what's happening everywhere else at Square Yards. They need to build the largest financing platform in India. That's their clear directive.
So when you have that approach, how do you address issues like cross-business opportunities? Where in the transaction business we need financing, how do you make sure the teams work together and that the transaction business doesn't go and talk to someone else?
So that is, like I said, that is where I get paid for. That is where most of my time and energy goes. So yeah, first objective is them to build their individual silos at a scale. And the second objective is to ensure that we drive enough synergies. Are we doing a great job of it? No. Are we doing a good enough job at it with getting better every single year? Yes. Like, for example, I was telling you the attachment rate. So 50% of our real estate clients take mortgage in-house. It is very good. It should have been 75%. It
Why
will
is
be
it not 100? Right? At the end of the day,
because 30-40% of the consumers never take mortgage. Of the target audience, we would still be 70% right now. But yeah, you're right. Of the target audience, it should be 100% over the years.
Yes.
Every single consumer who has done the real estate transaction through us should get their home renovated through us. Now, today, 70% of my home renovation business comes from the real estate captive clients. But ideally, you're right. It should be 100%. More importantly, our real estate business scale is so large that my home renovation business should be doubling every year just purely because of those captive clients. So there are a lot of opportunities on the synergies. We see them as bonuses. We see them as plays to improve our profitability. How do we continue to improve our gross margin? There should be significant upside on the table because of these synergies, which are still not fulfilled fully.
Okay. One question that has been screaming at me this whole time is what you seem to be doing kind of goes against some of the perceived wisdom there is out there in the industry. We've heard from other people, other founders who have said, no, we just focus on the core, what we do well. And I know Simon, whenever I talk to Simon, he always says, just keep it simple, just do what you're good at. You guys seem to have, like you said, gone and built potentially 5 separate businesses. Is that simply because you were incredibly ambitious from the beginning and you just fancied a real challenge and a big headache? Or is there something unique to the Indian market that you think only a business that has all of these different components can truly work, and a search and discovery, pure portal maybe doesn't work?
These two, and I'll elaborate, plus a third point. I think having enough and right bandwidth is very, very critical. So first, yes. Have we been ambitious? Yes. So again, the question every time has been, can we build $100 billion business? The question has never been, can we build a unicorn? Question has never been, when do we exit? Do we exit? You'll be surprised to know it's been 10 years. None of the founders have sold even a single share.
Okay. And how many founders do you have? Because you were telling me before how many founders you have. It's
20 co-founders. We still own 55% of the business. We haven't sold a single share. Unwritten dictate. None of us are going to sell for the next 10 years. So,
wow.
so we're building a long-term potential organization. So that's a key word. We think revenue, we don't think valuation. So a lot of ambitious streak comes from that what do we leave the legacy as once we are done with it, once we are tired, once we move on over, hopefully after a few decades. Second, you're right. I think that answer is not just specific to India. And probably Simon and you are better. You have seen more markets than I have, more global markets. But my reading is that's a similar challenge in pretty much every emerging market, whether it is India, whether it is Indonesia, whether it is LATAM. Until and unless you solve for significant parts of the value chain together, it's very difficult to make money, but more importantly, it's very difficult to scale. And this is the reason you don't see large search and discovery platforms in any of the emerging markets. And this is the reason you don't see large isolated financing platforms also, or distribution platforms in any of these countries. This is the reason you don't see large pure transaction agencies also in any of these countries, because a lot of these variables need to come together in emerging markets, just how the market operates, just how the consumers operate. So a lot of this, so part of this was design, ambition. Part of that was forced, market. Part of that, like I said, last but not the least, a very important reason has been having the right team to be able to do that. So that co-founding team, and proud to say that no one has ever left us. We have been sticking together for years. These individuals act as CBOs. Is like if you could pick any of these 20 people instead of me for this podcast, you'll realize the same messaging, the same ethos, the same ambition of trying to build something over the next few years. This was very, very critical because we are building multiple businesses, complex businesses in complex market. So Tanuj alone could not have done that. And we needed a variance of 15 or 16 Tanujes to be able to do that.
Yeah, I think you hit on some important points there. One is, if you are building a transaction business, especially in an emerging market, if you don't have a constant supply of buyers, it's a major problem. So you have to build the portal, the front end, and
right.
I would do exactly what you've done and get established homes on the same portal, give a meaningful experience to consumers, grow that as aggressively as possible. Otherwise, you're reliant on a wide range of more inefficient channels. And then, of course, you've got to solve the big, and then the big problem that all these markets face is money. Got to make sure that the buyers have access to cash, and the challenge is these are quite underfinanced markets, I guess is the word I'd use, where there's not a lot of money being borrowed and loaned, and if you can make it more readily accessible, then it makes a lot of sense. So you have those three bits coming together, and then of course you can then expand into renovation or rental management or whatever works up there. But those three core are quite critical.
And another interesting opportunity which we have only recently started working on is a B2B businesses. So for the longest period of time we have focused on all these consumer segments. Then we realized our key stakeholders, whether it was banks, whether it was real estate developers, they needed significant intervention on the digital journey. So over the last couple of years, we have started building things like digital twins, evaluation for these stakeholders. Early days, but this B2B segment has been only a couple of years. This year should end up doing almost $6-7 million. Next year should double. Very high gross margin business. But more important, I think more than the numbers still, more than the economics, it allows us to deepen the relationship with real estate developers, with financial institutions, to be able to continue to explore the working relationship we have on the B2C side.
Yep, makes a lot of sense. Another question that was sort of related to what have been the challenges over the years, but I want to bring it to today. What are the 2 or 3 things that sort of keep you up at night, that make you think about the growth of this business, and as you move, towards an IPO? What are the 2 or 3 things that give you a headache?
People, opportunity cost, and people. So I don't think capital is a constraint, especially now where we are operationally profitable, cash flow positive. And plus, in any case, we are in early days of our journey of operating leverage. So margins are only going to improve from here. So that's not a challenge. I think the opportunity cost has changed over the last 4 years, 5 years. 5 years back, we were one of the few prop tech players across India, across the globe, trying to solve for various problems across industry. That's changed. Today, we are probably 2x the size of next largest player. And my favorite statement to everyone is we are the largest player in the largest sector in fifth largest economy. Um, and and it's not even a duopoly. Like we are probably in every segment 4, 5, 6 times larger than than the nearest competitor. Um, if we don't, and plus we have a very strong co-founding team. If we don't make it from there, we would have done something horribly wrong. So I think where I spend a lot of my energy, time, um, and I lay awake at nights is uh, try and making less mistakes. We made a lot of mistakes. I'll be very honest. I think I still believe if you send me back 10 years, I would have told you we should have been able to build what we have built in half the time with half the capital. Unfortunately, not. Obviously, the perspective is continue to make less mistakes every single year, not repeat the mistakes. Now, those repeats have been stupid, and those mistakes also have been out of our control, partly because of the industry, partly because of the regulations, but partly also because unfortunately, there are no best practices in terms of what we are trying to do. We don't have examples in front of us. See, apart from Lianjia in China, no one has really done it. Who has done it all? So we can't copy paste in terms of what happened in China or what's happening in US or probably what happened in Australia way back to India. So every single day is a learning curve for us. We make 10 decisions. We probably go right on 7 of them, go wrong on 3 of them. One thing which we have realized over the year is ability to realize where we are wrong and ability to course correct as fast as possible. But that's effectively the largest challenge. The challenge is like you asked me about IPO. Yeah. Do we want to go IPO? Yes. Are we very close to going IPO? Yes. IPO is not a capital market milestone for us. I think IPO is more of a building blocks of a like building a multi-year legacy for us. So which is why it is very important for me to ensure that most of my senior colleagues, most of our co-founders, most of the senior management buys into that we are going IPO, not because we want to cash out, but we are going IPO because that could be and that should be the day zero for the next 20 years. And ability to retain the same hunger, ability to retain the same fire, same ambitious streak, what Ed was mentioning earlier, to be able to continue to go on.
Okay, regarding the IPO, you said before we started recording, it's kind of an open secret at this point. Is there anything that in preparing or getting the company ready for an IPO, you've learned about the company, something that you wouldn't have discovered had you not been on the path?
Compliances, I think very important. Compliances is not just about the data and the reporting. I think the compliances is ensuring that we are open to scrutiny, as much scrutiny as possible, as much needling as possible, and which is what we have done. We have prepared. Were we ready 4 years back? No. Are we ready today? Significantly, yes. I think from here, the only variable for us is when we should potentially hit the market, when we should not, is a function of our confidence in our platform's ability to build enough profitability, continue to have enough growth curve, faster growth curve over the next few years. So I think the only variable is our confidence. Again, you do IPO once, you do it right. We don't just want to do an IPO for the sake of going public and, like I said, for the sake of liquidity. Our perception of going public is every capital markets player, if they want to play the India consumer home buying journey, they should want to play us as a proxy to that. That is a milestone, objective milestone. Now, to achieve that objective milestone, what you need is numbers, what you need is profitability, but more importantly, what you need is mind share in the industry. Now, India is not one country. India is combination of 10, 15 different countries. So what you do in Mumbai is very different from what you do in Delhi, is very different from what you do in Bangalore. Are we being the best representation of the real estate cycle or the financing cycle in that particular region? Do we have the highest market share, even though it's a fragmented market share? Do we have the biggest distribution platform? Is each one of our businesses, market leading businesses, are they making enough money? So those are the questions we are trying to solve. Some of them have been solved in the last 12 to 18 months. I think some of them will be solved in the next 12 months. And that's a timeline I've assigned to our potential IPO, probably over the next 12 to 18 months.
Okay. I want to go back to talking about being a search and discovery site, because after all, that's kind of what most of our listeners are going to be interested in. You mentioned at the beginning that on the established home side, you don't put whoever pays more at the top and everything is done on merit, right? I think you also mentioned that you rank agents. So I know that obviously markets like India, building trust is a very big issue. How is it that you rank agents? Is there some sort of like trust score that you have? How does that work?
So quality score, quality is the most important variable in our algos. So I'll tell you the reason why, because Simon also asked, why do we have a pre-listing model? See, what we realized that in India, and I think that's true again for most of the emerging markets. So most of the revenue pool of the digital side of the search and discovery is very limited. Like for example, in India, the entire revenue pool is 100 million, 120 million. And 70-80% of that market is in any case either a Google or a Facebook. So even if, and this is the same problem most of the markets have faced, apart from US, larger markets, apart from Australia. Property Guru is a very good example. In Singapore, they have 70% market share. Where do they go? So that's why they have to go to Southeast Asia to be able to grab market, because they see, fortunately, unfortunately, search and discovery is the winner takes it all market. And when you build a winner takes it all market in a very, very small revenue pool, you are limited for scale, you are limited for growth. Second variable was, India is interestingly one of those very few economies where no search and discovery platform has won the battle yet. And so as a thumb rule, again, anywhere you go, your largest traffic portal is roughly around 8 to 10 times, 1/8 to 1/10 of the population of that economy in terms of traffic. India, with 1.5 billion population, the largest traffic portal is 16 million traffic. There are 3 between 15 to 16 million. There are 2, including us, between 9 to 12 million. So there are 5 large search and discovery platforms, none of them having won the market.
Just a quick question on that. Is that because of regional base? I mean, you said India is not one country, it's 15, right? Sort of tied together, 15 regions. So is there a degree of regionality?
So not that much, Simon. On the search and discovery side, I think is mostly to do with revenue pool. So because most of our peers who are pure search and discovery platforms, they have very limited revenue pool to play with, which also defines the investments they could do in the business. So that was our starting point. We told ourselves, if we sacrifice this $20-30 million revenue opportunity, we are effective. And unfortunately, we were the last entrant. The other 4 players have been around for 10 to 15 years. So they have built significant organic traffic. They have built significant brand image, and we had to compete with all that. So we told ourselves, and also another interesting highlight, which is very specific to India, I'm not sure if true globally. India has roughly 450 to 500,000 independent agents. Paying agents of all the largest portals in India are only 20,000, 25,000. So we are saying unfortunately, most of the supply also doesn't get digitized because of either lack of access to the agents or agents' inability to pay or non-willingness to pay. So our challenge was twofold. How do we crack the supply? We were very confident if we can crack the supply, eventually we'll crack the demand. And 2, do we sacrifice the revenue pool to crack the supply? So the clear answers were yes, which is when we started building the pre-listing platforms. Because another thing we were fighting for internally is we did not want the existing homes market agents to view us as a competitor, because eventually we are a competitor in a primary market for them. So which took a lot of time for us to build trust with them, that we are not going to come and compete with you in the existing home business. At the same time, we will not allow you to list the primary assets on the portal. So this was a quid pro quo approach. All this is played out. We started, like I said, building it in 2022. In a couple of years, we became the largest listing platform. So today, around 50, 60,000 agents. We are still only 10% of the market, by the way, in terms of number of agents we could reach out to. 50, 60,000 agents list on the platform, million plus listings. And like I was mentioning earlier, just purely because of, so we haven't spent anything on the brand. Our monthly marketing spend, you will be surprised, on the search and discovery platform is $10,000, $20,000. That's it. And we have moved from 1 million organic traffic to probably 9 million now. And we continue to move.
But how's that? If you're not spending on branding, what are you spending on? Is it SEO driven? Is it
SEO driven predominantly?
Yeah.
Like I said, a lot of this is word of mouth, a lot of this is supply based. And to answer Ed's question, what he was asking earlier, we realized our entire moat has to be around, because India, and even we are struggling, India still struggles with quality of the listings. Because again, if you go to whether it is quality of the photos, whether it is transparency of the information, tailing of the information. So we realize even though we are not charging money from the agents, one of the ways to push agents towards higher quality listings is build algos around the quality to give them higher leads. So to answer your question specifically, Ed, every agent is ranked on the quality score of the listings they have provided the platform with, ratings by the consumers of their interaction by the consumers, our assessment of their servicing levels with the consumers, and it's a obviously complex algos which go around, which continues to rank agents, continues to rank micro markets, and accordingly they get leads.
Okay. So I've got a follow-up question on that. Quality has a number of dimensions: accuracy, completeness of data, quality of images, and so on. How do you ensure, in a country the size of India and the volume of listings, that the listing is real?
Difficult unless you spend significant dollars around it. Part of the algo check is ensuring there is documentation around the listings, which gives them. So again, we are not saying that we only allow the listings with those document checks, but having those document checks increases the quality score.
Yep.
So how complete is your listing increases the quality score. Accurate listing increases the quality score. Obviously, I can't disclose the weightage of how we continue to evolve these metrics on a monthly basis, but that's effectively goes behind it.
Okay. I've got another question then around all this is, what is the role of AI within the business today and into the future?
So, see, apart from, so I think that is more of a machine learning, what we are doing with the algos, not so much AI. I think the biggest role of AI in the near term, which we are envisaging for us, is on the transaction business. So for example, we have spent significant time and energy in the last few months in trying to build AI sales agents. In fact, in home renovations, we made it live last month with obviously not the similar impact as running a physical sales team, but we were able to achieve 40% results implementing pure AI algos rather than having physical teams in place. So again, those are early days. These language models are evolving. Their roles are evolving. But we believe in human-enabled distribution businesses like real estate, like financing in India, AI would play a significant role in reducing bandwidth, in reducing the timeline, and more importantly, making the transaction process much more efficient.
Right. So I guess what really is at the core of all of this is you're doing 180 million of revenues. You've got a 7 to 8 million EBITDA, which is around 3 to 4%.
All right.
And to one of the things that will become I've been involved in I've done 5 listings on various stock exchanges, and I've lived with aftermarket, and I've lived with a whole range of issues, is when you have an EBITDA of 3 to 5%, you're quite close to the wind, right? A couple of things can go wrong and you're negative.
Right.
So how do you drive this business to a 20 to 30% EBITDA margin, and thus give great value for shareholders?
So these are obviously the blended numbers, but if you actually uh, drill down and look at the individual businesses, because a lot of this is also a function of our new age businesses, which we are investing in the last couple of years. Real estate business is very, very profitable, operating on around 35% gross margin. Financing business is less profitable, more volume because we share significant economics with independent agents, but has been cash flow positive for years. We are still not making money on home renovations. Still early days for us in property management. We are investing heavily in these businesses. We are investing heavily in search and discovery. So that is where, in terms of in bandwidth, in terms of the digitization, the digital twin business. So all these businesses combined, we are at 3-4% margin. And last year was the first year of profitability. Operating leverage is increasing, kicking in year after year. So next year, our estimate is we should end at around 230 to 40 million top line with around 15% EBITDA.
Okay. So this is sort of the breakout year in terms of a lead up to a listing. I mean, you've got to be on that very strong growth path and being able to demonstrate you can get to a 30% EBITDA margin.
So there is a reason with entire listing frenzy in India in the last 6 months why we haven't gone and joined the bandwagon is because we realize we still need to demonstrate to the market, can we move to double-digit EBITDA margins faster?
Yeah, I would certainly recommend, because the issue is you'll get the listing away, right? You've got a good story. You've done a great job over the last 4 years of sending out quarterly updates, which I read. Okay, so you've got the world, sort of, at least those interested in the world and a strong list of people engaged in the topic. The biggest part about doing a listing is not actually doing the listing. It's what it looks like in 6 and 12 months after the listing. Because what you can say is a lot less, because there's a whole bunch of rules and regulations and things that you need to comply with. Compliance, that word you brought up earlier. Okay. So I think you've got to make sure you've got this momentum behind you, then you do the listings. Okay.
Okay.
So
100%. And plus in any case, these businesses should be, fortunately, before starting Square Yards, I was in capital markets for 10 years. I was an equity analyst. So I have seen the public market world very, very closely for a decade. And which is where a lot of these learnings come from. So what you said, we started sending out the detailed quarterly numbers 4 years back. Deloitte has been our auditor since we were 2 years old. So right from the day one's few checks and balances on regulatory perspective was very, very clear and critical for us. We always wanted to be a listed company at some point in time. We are building to be a listed company. But like I was mentioning earlier, like you had guided, listing is not just the day of the listing. In fact, I think listing is also not just about 6 to 12 months after the listing. Listing should be the day zero of building the next 10 years, next 5 years. How do you use market perception? How you use the brand image, which you build with listing? How do you use those currencies to continue to scale these businesses?
Okay, one final question for me to kind of bring it back to search and discovery. Sorry to keep bringing it back to search and discovery. It's obviously a small part, relatively small part of your business. But if you get this listing away and it's successful, you'll have quite a lot of money to play with. Now, you mentioned earlier there are kind of 4 or 5, 6 different real estate search and discovery sites out there. No one fully dominates yet in India. Can you see some consolidation, especially given that you're going to have a lot of money to play with once you have this IPO? Is that something that, or is it a no comment?
No. Actually, it's somewhere in the middle. So interestingly, you said that what Simon was mentioning, you realize in the journey that you can't build a large transaction business unless you have a constant flow of buyers. I think once we realized that, we actually went out shopping. That was 4 years back. Without naming anyone, without getting into the details, because of the compliance reasons, we were not able to, for whatever reason, we were not able to consolidate, which we realized would have been a no-brainer decision for a lot of our peers and us, because of combination of forces coming together. We were technically forced to build an organic search and discovery platform, because we realized we need to build a platform. We need to have buyers. We need to build the largest search and discovery platform, not just the search and discovery platform. if there was no way to buy it, we had to build it. Slow way, but probably, I think in hindsight, that was the best thing which ever happened to us. Much better control in terms of what we are wanting to build. So to answer your question, once we have significantly more currency, would we go and buy someone? No. At this stage, I don't think any other platform adds significant complementary value to what we have. What we rather do is what we haven't done so far. I use some of this currency to build a very, very strong brand positioning, pan-India. Like I said, we believe we have already won the supply side. We will continue to build it up strongly. To accelerate on the demand side, to move from 10 million to probably become significantly larger than any of the peers, will take serious long-term SEO organic strategy, but will also take significant brand building positioning.
Okay, that was interesting. I enjoyed. For anyone listening, there was a big smile came across Tanuj's face when I asked that question, which I wasn't expecting. Tanuj, thank you so much for taking the time to talk to us today. We really appreciate very busy founders such as yourself taking the time to talk to us and be honest and sharing what's worked and what hasn't worked. I look forward to hopefully covering a successful IPO for you on the pages of online marketplaces very soon.
Touch wood. Thank you, Ed. Thanks a lot for nice words. Thank you for having me. Thanks, Simon. Always great talking to you.
Fantastic.
Yeah,
and one quick thing, I want to get you to come and speak at the Bangkok conference that's coming up in March. Any chance of getting you to jump on a plane, come out and talk about the business?
I know a couple of times in the past we have spoken about it. Unfortunately, the timing of your Bangkok conference coincides with the most hectic month of our financial year every year. That is the reason. I don't even take a day off in February and March, unfortunately. So it is that hectic.
Okay.
That is where,
I'll try again next
we always
year.
meet. But I'll also keep on trying. I promise. I have to be there. I know I have to be there.
I've got an even better idea. October, end of financial year. We've got Madrid conference, 500 CEOs from around the world, C-level leaders.
That is doable. I think that should be doable.
Okay, I'm gonna sign you up as a speaker because you've got a great story, and I think the world needs to hear more about it.
Definitely. Thank you, Simon.
Okay.
Thanks.
Thank you.